Good morning, 11/17/2012. Happy Thanksgiving to everyone around the world and everyone in the United States. What we are doing and why we are gathered here today is to take a look at the monthly level now of the Dow Jones Industrial Average. It's 12,588. One of the things that I'm going to tell people is if Congress doesn't get their act together by year end, we are already seeing a monthly reversal below the 10 month and the 20 month, and you can see the calendar 2009 lows. You can see right here where we started this rally. This rally was a year ago in the fall and the winter time that we were putting in bottoms. We got all the way back up here where this diagonal trend line is. They pumped it all the way back up here to where the financial crisis started in 2008 in the Dow Jones Industrial Average. I will tell everyone that back in the 1930s, there were different years in the 1930s that we had almost the similar, identical type of moves. The problem that we have here is that the 2009 depression levels, we come off of the 2009, we were at depression levels, but 2008, this is how it happened on a monthly level. Now, granted that corporate of America has a lot more money on the balance sheet, but I will tell everybody that a close below the 10-month and the 20-month is a bear, not a bull, period. You don't have to speculate. You don't have to try to figure it out. It's just that simple. What happens in these longer yearly trend cycles with stimuluses in the United States is that once they play their roles all the way up here, and now we're talking about much higher tax increases. We're talking about the difference between when we were at the bottom here in 2008, corporate of America in the United States was on their hands and knees, meaning that the corporate balance sheets were at all-time lows. The only thing difference between this period and the period right now that we're in is that corporate of America balance sheets are extremely, I would say they're extremely good. Meaning that once we go into a bear move, that money that's on those balance sheets would burn up very quickly. It would take a year and a half, an 18-month cycle. If things go wrong in this country and things are not going to have a resolution, that means that the earnings cycle and Dow and the broader market earnings are going to come down. They've been very good for the last 38 months or so. Generally, anytime that we have what we call an economic expansion, they last for 36 months, 3 years. You can see here is 1 year, 2 years, 3 years, and we're at the top of that expansion cycle where they fail. Now, the 10-month moving average on the Dow is very important. That's going to be 12,559. We tested it because we are at 12,588, ended up 45 handles positive on the day. Ever since we've had the election, you can see what has happened. We have totally sold off. I will blow this part of the chart up because this is going to be the part that's important. I'm below the 10-month and I'm sitting on a 20-month significant moving average. 2012 rallies start right here at the bottom end of this monthly bar. There it is. This is where we're at about 12,166. This bottom would be a double bottom calendar 2012. We are going into the ending part of the year. Congress says they're going to do something. If they don't, you're going to come down and we're going to test the whole broader monthly range right here. If things get ugly going into 2013, we will break this support level right here and we will continue to trade all the way back down here where 1 year ago on 10-1, this is 11-1 of 2011, and this is the bottom part of 12-1 of 2011 where no one wanted to be in the market, but let us not forget it was all Europe. It was all European stuff, all their catastrophes. Okay, they're printing money. QE3 has gone into play. They've done everything in this particular yearly cycle, which right now is at stake. If there is no resolution, this whole thing will unwind. There would be nothing but selling, 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 selling. Earnings would go in a contraction mode. We don't know exactly if that's going to happen yet, but we will be prepared for it one way or the other. The 10-month moving average on the Dow Jones, we are going to say that's going to be 12,987. That's your resistance level. We already have hit the 20-month moving average at 12,559.43, and we bounced from that area. A sell through the 20-month moving average will bring us down to the lower trend line. This is what we call a bear reversal. Every pullback, we were able to rally back to 5.5-year highs. The calendar process for this year is over with, meaning that what started out last year around this time can totally unwind, and we're right back where we started from. However, it's not where we started from. Yeah, we started from that area in a bull. But when we go into a bear, if things don't work out right, you are coming all the way back down here to where that this lower end of the bar on 10/1 of 2011 is 10,935. This is where it started last year. The higher, and there's going to be other levels. I mean, you got the high end of the bar. You know, this is going to be areas at 12,136 right here. And if we break this 20-month moving average, you'll see more selling, more tax selling. We've already had this Dow Jones. If you take a look on the monthly level, I'm going to give you the amount of correction on this level. And here it is on the following. On 10/1 or 11/1, we were at 13,099. The high on this calendar month was 13,290. The low, 12,471.49. That is over 1,000-point correction that we've had since Mr. Obama's been reelected. Over 1,000 points in that short time frame is very, very, very significant selling in the Dow. That means that a lot of the tax selling that people have talked about has got 1,000 points of that already. Meaning, what does it mean in a shorter macro term? People are selling, they're taking profits, they don't want to pay higher taxes potentially. We don't know if that's really going to happen yet. It's still up in the air, but people sell and ask questions later. 1,000-point correction in the Dow since his election period really is too significant of selling. I mean, very significant. I mean, they're selling this thing since we've had this whole bull run. I mean, 1,000-point correction is very significant in bear territory. That's what happens in bear markets, not bull markets. So we're very coherent that in the short term of the selling that we are oversold. Any bounces as it stands right now, any relief rallies will be sold into resistance. Do not hold on to them until the fiscal cliff has been resolved. I currently stand at 80.42% on a monthly. It's still overbought area as far as I'm concerned because of the fiscal cliff and the things that can happen. When you sell down this much in a very short time frame and we're testing this whole breakout right here. There's a trend line. This was our first correction. This is our second calendar correction. This correction is much different than what this correction was here in the mid part of the year, where they rallied up to the 5.5-year highs. I will just tell everyone to be on alert. If you're an investor or a trader outside of our MMT school, what you would want to do is the following. Any move up in the Dow until there's resolution, you don't want to be trimming your positions. What you want to do is get out of the way until things are cleared up. If you don't and you hold on to it, you could regret it. And I will tell you, in this kind of case right now, 52% of the people are sitting on the sideline of the broader tape. That means that 52% of investors are not willing to do anything. We will talk about retail sales. We will talk about other things that will affect this. But in a very, very short term, things are tradable from support to lower high resistance levels and exiting. I would not fall in love with anything and try to hold it thinking that we're still in this calendar bull, because right now, unless things come out favorable in Washington, there is significant downside. Remember that the monthly, yearly cycles have played their courses. QE3, printing presses around the world, all of that stuff is at a fiscal cliff. So beware moving forward that the Dow monthly, usually a 20-month moving average, is a very, very significant monthly support level now. And you can trade up from there to half of this monthly bar. That's about 12.8 or a little higher. And buying at the lower end of support, but then selling in to half of that monthly Dow bar at resistance levels would be the key trade management that you would be looking at. Because until things are changed, even though that we are oversold right now across the board, and this is the best 2 months of the year, but you see, if they don't do anything, it'll be the two worst months of the calendar year.